Hello everyone, how are you wherever you are? So today I'm going to explain the market structure starting from the higher time frame to the mid time frame, and then so today I'm not going to talk about the entry confirmation. I'm going to talk about how you analyze your chart starting from the higher time frame to the mid time frame in a simple manner. So I'm just trying by all means to make things simple and mechanical so that you, when you are trying by all means to mark your charts, it will be very easy and you become profitable. So number one, we always try to mark our charts starting from the higher time frame. So the market, we have structures. We have three types of structures, right? We have bullish, bearish, and consolidation. So usually I don't trade consolidation. I'm only focusing on bullish or bearish. So this is bullish market structure. What is bullish market structure? Is whereby the market is moving to the upside. And then bearish market structure is whereby the market is moving to the downside, simple like that. So what am I looking for? I'm looking, market doesn't move in a straight line like this. It moves in um zigzag, forming highs and lows, lows and highs, simple like that. So as you can see, this is the bullish market structure whereby the market is moving to the upside, forming highs and lows, simple like that. And then this is bearish market structure. As you can see, the market is moving to the downside, as you can see. So the market is moving to the downside, forming lows, highs, and lows, continuing following the trend. So this is what I want to see in the market. So as you can see right here, this is the book market structure, as you can see, and then this is the real life market structure. The market is moving to the upside, right? And then it reaches a point whereby it retraces to form a low, right? And then continues with the trend, breaking the structure. So the break of structure to the upside is confirming to us that the market is in a bullish market structure. And then we have this one, the bearish market structure. The market is moving to the downside. Then it reaches a point whereby the market is retracing, and then it continues with the trend, breaking the structure to the downside, which confirm to us that the market is in a bearish market structure. I think guys, this is very simple. Okay, and then we have what we call internal and external market structure. So in this case, this is the higher time frame, be it on a daily, 4 hour, weekly, or monthly, depends on your trading style. So this is the higher time frame that I use on the daily time frame. You can see that this is the highest point of the daily time frame. I'm on the bullish market structure, and this one is the lowest point that causes the market to shift to the upside. So what happened? The market retraces to the order block that causes the market to break the structure right here. Simple. So this is what we call the external market structure. This is what I do on the high time frame. So on the high time frame, what am I doing? I'm identifying the high. I'm identifying the external market structure. Is it bullish? Is it bearish? That's the only thing that I want on the higher time frame. And then on the mid time frame, okay, on the mid time frame, this is the internal market structure whereby the market is continuing with the trend or pulling back to the order block that causes the market to break the structure. So what is a continuation? What is a pull? So a continuation is we are continuing with the higher time frame trend. So this is the continuation. As you can see, the market on the mid time frame will be continuing with the trend. Okay, And then this is the pulling back to the order block that causes the market to break the structure. So this one is the pullback. These are the things that I want to identify on my lower time frame. So don't complicate things, guys. Try by all means to make things simple so that you will be profitable in the market. So this is my lower time frame. So this part is only this one. Let me mark it so that you see is only this one. So this is the internal market structure. On the internal market structure, that's where we look for entries. So I don't want to waste much of your time. I want to go to the real charts so that we can mark the charts. See that these things are very simple and mechanical. When you follow your rules and just respect what has to be done, and you make money, simple like that. So as you can see, this is the weekly time frame. I'm just looking for the direction. I don't mark my charts on the weekly time frame. I only look for the direction. As you can see, the market came here, go up, came here, go up. So this one shows to us that this is a bullish market structure. As you can see, market come here, go down, go up, right? And then break the structure, break the recent low, which tells us that the market is shifting to the downside. Simple. And then you can see this is the high, this is the low, this is the high. So right now the market is trying to create a new low. So this is the bearish market structure, this is the bullish market structure. So this is a very important, guys, to this identifying the direction of the market is very important because it tells you where is the market going. Okay, so I'm going to start marking my charts starting from my daily time frame. As you can see, the market right now is in a bearish market structure, as you can see. So what's going on? This is my last break of structure to the downside. So the market is confirming to us that the market is going to the downside. So I'm going to look for a candle which closes below this high. So why didn't I put my line here? Because as you can see, if I were to zoom in, uh this this candle didn't close below this low, so which tells me that the at this point the market didn't break the structure, but this candle, this black candle you are seeing right now, closes below this low, which tells us that the market is now shifting to the downside, simple like that. So I'm going to mark this as a break of structure. So my question is, which one is our high, which one is our low? This is the highest point. I'm talking about the highest point. This is the highest point that causes this whole movement to break this structure right here. So I'm going to mark my daily high here, right here. This is my daily strong, or my daily high. Okay, and then this one is my daily weak or my daily low. Simple like that. So in this case, I'm trying by all means to narrow my focus so that I I have a small area to trade on. Simple like that. So right now, as you can see, um, we are trying by all means to trade in this zone. So right now I'm scaling down to mark my internal market structure. So as you can see, this is my internal market structure. Market came here and then try to push up and then try to go down like this. So as you can see, right now we are here. Right now we are here. I'm trying by all means to mark what I'm seeing right now. So the market break the structure right here, right here. Okay. Okay. This is not the high. This one is the high. This one is the high. The market break the high. This is the internal high which was broken. And then what happened? What happened? The market try to shift to the downside. Market try to shift to the downside. So as you can see, we have a market shift right here. Okay. Oh, we have a market shift right here. I'm trying by all means to make my things so simple so that I'll see what's going on in the market. And then this is a break of structure to the downside. Why am I not putting my line here? Because the candle didn't close below the low, below the low. So this is my break of structure. This is my break of structure. And then which means the market came here. Let's scale down on the H4, on the H1, sorry, and the H1. On the H1, I'm looking on this structure. Okay, market break the structure right here, right? Break the structure, which is an internal structure, and then breaks another structure right here, right here. This is a break of structure right here. This is a break of structure, internal break of structure. So right now you can see that our focus is here. So which one is the recent high, which one is the recent low? As you can see, market tried to push up and then break the structure. So which means this is the last point, last high that causes the market to what, to break the structure. So this one is my 1 hour high, this one is my 1 hour high. So right now my focus is here, my focus is here. So what's happening? This is my order block. So when marking my order block, I use two types of marking order blocks. I use the what we call ranging, when we are trying by all means to mark the consolidation stage. As you can see, market was pushing to the upside and then it tried to consolidate here and then it pushed to the downside. So I mark this whole zone as my order block. As you can see, right now we have this order block again. Okay, we have this order block, right? So this, I'm looking forward to see the market to come to my zone and then push to the downside. So I'm going to my mid time frame, which is M30 and M15. So on the M30, am I saying, I'm seeing that this is the zone that I'm trying to trade on. So right now I'm in a pullback. The market is trying by all means to pull back to this zone and then continues with the trend. So what am I looking for? What am I seeing right now? This was a break of structure. This was an internal break of structure of 1 hour. Internal break of structure in the 1 hour. So this is a break of structure, and then this is another break of structure. So which tells me that the market is trying by all means to push to the upside and then it continues to the trend when it mitigates either one of these order block. Simple like that. So right now we are in a trade whereby I want you to see something. The market respected this order block. The market respected this order block. As you can see right now, the market came here, pushed to the upside, and then retraces, push to the upside, forming a high, retraces, and then push to the upside, forming a high right here, and then retraces to the order block. See, there's an order block. There's an order block right here, which causes the market to break the structure. There's an order block right here. This is an order block that causes the market to break the structure right here. So if someone wants to take a trade, like right now we are in a trade, we entered somewhere here, we entered somewhere around here, right, and then put our stop loss here and then targeted like this on this point. So this is very simple, guys. Only trade on A plus setups. try by all means to trade A plus setups. Right now, I know for a fact that we are in a pullback, right? We are trying by all means to pull back to this order block. When the market is on this order block, I'm not looking for an entry, for a buy. I'm trying by all means to look for a sell because the market already mitigated our order block, which means either anytime from anytime when the market reaches this order block, it's going to fall, it's going uh to follow the market, follow the trend. So right now, if you were someone who was on the charts, when the market came break the structure right here, came to this order block, where some at some point you were supposed to look for entries, and then you enter, target the next high right here, and then you are done for the market, and then you waited again. When the market break the structure, you draw your order block. This is the order block that sweeps liquidity. As you can see on the left side, it sweeps all the liquidity right here, and then causes the market to break this. So we know for a fact that when the market came back to this zone, it has to cont- continue with the internal trend. Mitigate when the market mitigate our order block, then we look for sales. Simple like that. So today I'm going to say something before I close this one. Most of the people, be it beginners or maybe professionals, sometimes are afraid of losing. Sometimes there are some trades that I say they are good, uh, they are good losing trades, and sometimes I can say they are bad losing trades. Why am I saying this? There's a time whereby all my confluence were met and I lose that trade. That's not my fault, right? The market did what has to be done, and then I lose the trade. It's okay. The very important thing is I follow my rules, I follow my plan. That's the important thing. So whenever I'm trying to trade, don't be scared. Don't be scared of losing. You are going to lose. That's one thing for sure. But try by all means to minimize the losing trades and maximize the what? The winning trades. So how are you going to maximize the winning trades? By taking only A plus setups. So I'm trying by all means to look for A plus setups. That's the only thing that I'm trying to do. Simple like that. So these things, uh you have to set some rules that you obey for yourself. And then if you set those rules, try by all means to obey those rules for good 30 days. Try by all means to obey those rules for good 30 days. Trust me, after those 30 days, you'll be on another level in trading. So most of the people will be like, trading is betting, trading is this, trading, you always lose in trading. No, it's because when you trade without a plan, when you trade without rules, you are gambling. That's simple. You are gambling in the market. But when you trade with precision, when you trade with rules, you are working. When you treat this thing as job, you are working because you are trying by all means to protect the money, to protect the capital. So whatever you are going to do, you are not going to be reckless. You are trying by all means to work with precision. That's one thing. So I always say, if you are starting to trade, try by all means to look for a mentorship. Try by all means to look for someone who can tell you what to do, who can guide you in any move so that you grow. You grow, and then you reach a point whereby these things are very easy. And then that's good. You are good to go. You make money in the market. So these things, it's not just one day thing whereby okay, I just teach you the mechanical strategy, and then you just wake up and then everything is normal. You're just earning money with the market. No, the hard part of the market is you. You have to master you. Because a market, I always say, market is just a mirror, just reflecting you, what you do, who you are. If I'm emotional, market will reflect you those things. And then what it did, it punish you. Every time you became emotional, it punish you. Every time you become you try to revenge, it punish you. So market is a mirror that guides you, that shows you who you are. So try by all means to work on yourself. Try by all means to set some rules that you obey, so that you'll be profitable in the market and you make money. Simple like this. So thank you guys. Have a good day. Have a good night wherever you are.